Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, here we are, June 30th, last trading day of the quarter, the second quarter, and the equity markets continue to power up. Okay, so let's review what's going on. Well, the Nasdaq's trading about 4,400 this morning. It's a new, again, 14-year high. The S&P 500 continues to flirt with new highs every other day. The Dow Jones Industrials are trying to get above 17,000, and the Dow Jones Transports are also flirting with new highs. So basically, we have all the indexes continue to move higher. Now, at this point, one may say, well, this market's really long in the tooth, and we're probably due for a correction or even a bear market. Well, who really knows, considering we've been hearing this kind of talk for, well over a year already, yet the markets move higher. So this is why I want to call today's presentation, price is the only thing that pays. Now, you've often heard me say that let price and volume be your guide, and this is the most important thing. If you let all these other factors distract you, you may have missed a really good rally. Now, when will the rally end? I don't know. I don't think anybody does. But if you keep focused on the price and volume of the market and your individual stocks, you'll do okay in this market. Now, for instance, we have a dollar index, which isn't acting as strong as we thought it might be, so that's a negative for the market. We have the 10-year Treasury yield hanging in there at about 2.5%. Again, not a very positive thing for the market again. We have the VIX at all-time lows, pretty much, showing a sign of complacency. That's not a good sign. The CBOE put-to-call ratio also showing complacency at very low ratios. Not a very good sign for the market at all. Now, we have the sentiment surveys showing extreme bullishness, whether you look at the American Association of Individual Investors or Investors Intelligence surveys, all showing extreme optimism, which is kind of bad for the market. However, despite all these things, the market continues to push higher. We have political unrest around the world. Started with Ukraine, now going on in Iraq, and yet the market pushes higher. Economically, you can say just terrible things what's going on in Washington. Administration has no idea how to steer an economy, but yet stocks push higher. So when will this end? I don't know, but I can tell you a few things that you need to watch for. A, watch the leading market indexes. So far, we see very little signs of professional selling on the Nasdaq or S&P 500. Basically 2 days on the Nasdaq and 3 days in the S&P 500. Now let's say we started seeing 5 to 6 days, I'd say, okay, be a little careful here. Now also, leading stocks continue to push higher. A lot of stocks I've talked about here have broken out past 1 or 2 pivots and continue to move higher. For instance, this morning, last week I talked about Palo Alto Networks. That's breaking out past the 82 pivot I was talking about. Illumina is breaking out past the pivot this morning as well. Gilead Sciences breaking out past 83.80. That's a stock that's moving very well. We talked about that. It's the leader in the Hep C race. Celgene broke out 2 weeks ago past the pivot and again flirting with its all-time highs. Now we have Netflix approaching a pivot. We have Tesla Motors also moving up. So you want to keep your eyes on these stocks. Now, if these breakouts start to fail and these stocks start to fail, then that would tell you that maybe the market is going to turn. And lastly, you want to look at your own portfolio. How's your portfolio doing? If it continues to move higher, you should hang in there. However, if your portfolio is starting to do worse, maybe it's telling you 2 things. Either you're not in the proper stocks or the market is indeed turning down. So the point is here is no one really knows what's going to happen going forward. Yes, there's a lot of statistics showing that we're due for a correction or even a bear market. And whether it's going to start tomorrow or a year from now, I have no idea. But I do know if I watch the price and the volume and use it as my guide, you'll be okay. You won't get hurt too badly. So as always, have a good trading week. I'll say it one more time, the most obvious thing, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.